Hi, and welcome to the Trading Pit. My name is Lundy Hill, and this is my weekly market update for commodity futures, stocks, and cryptos. Please note this is not investment advice. I am not a financial advisor, and past performance is not necessarily indicative of future results. Today is March 21st. We will be discussing this week's price action. Most of the data is up to date, but this next chart is through Thursday, March 20th. Here is the performance table listing most major U.S. commodities and the top three cryptos. As I said, data is through yesterday's close. Big winners in commodities so far this year are copper, coffee, silver, and gold. Copper is up an amazing 27%, with coffee coming in second with a respectable gain of 23% so far this year. And silver and gold are still up 17 and 16% respectively. To give you some idea, the E-mini S&P futures are down 4.6% so far this year. So they are not having a good year, and they are being outperformed by the more traditional commodities, copper, coffee, and precious metals. Cocoa this year, we can see, is pulling back on its stellar gains of the last few years. It is down 31%, and Bitcoin is down 10%, and Ethereum is down a whopping 41%. Now on to the charts. First up is the 4-hour NASDAQ chart. NASDAQ is falling from 22,200 all the way down to 19,160 in just a few weeks. This is one of the sharpest declines in recent history. In the past week, prices held close to the lows of this big down move. And that's why I called it, this is called an L formation, as price action resembles an L. This signifies that no real buying pressure has come into the market since this big drop in price, because prices haven't even rallied up to the Fibonacci 38% point. So anytime it rallies up just a little bit, the market is finding sellers. That's why I believe more selling is in store, and I think the NASDAQ could drop another 1,500 to 2,000 points from these levels. This is the ES futures chart. This is a weekly chart as we zoom out a little bit. Again, before this big drop in prices over the last 5 weeks, ES had completed a beautiful 5 waves up pattern since November of 2023. From this entire move, the Fibonacci 38% retracement level comes in at the 5,400 area. This week ended up after barely breaking last week's highs. Prices closed back below last week's highs. That's negative. The 100-week simple moving average is currently at 5150, so we are well above that. This 5150 also corresponds to the Fibonacci 38 to 50% level. That's why I think this is a good buy zone target. Is this a good place to maybe sell some puts? I don't know. That's up to you. After the dramatic sell-off and a little bounce, I believe prices have further to go down. Now everyone's favorite so far this year is gold. Gold sold off big today. Here's the 4-hour chart. The left of the chart forms a shallow head and shoulders bottom formation, which I've discussed prior. The breakout of this pattern happened at the center of the chart, and it's labeled a green 1. The target of this breakout is shown. This is an equal wave above the breakout zone as below the breakout zone to the head. The target of this breakout was reached, albeit it took a little while, and it was surpassed by about $25. The trend line marked at 2 over the last 6 days was broken after a 3 drives to a top. Those are labeled 1, 2, and 3 in red. This is a classic chart pattern my father liked, where market tops and bottoms typically have 3 drives, and then that's the end. And each drive is successively smaller. You can distinctly see that Drive 2 is less than drive 1, and drive 3 is less than drive 2 and 1. At 3, we have the 100 bar simple, at the big green 3, we have the 100 bar simple moving average. That's coming in at 29.55. This will be accelerating upward. Now let's zoom out to the weekly chart. Gold has had a beautiful Elliott 5 waves up since breaking out in February of 2024 at about $2,000. Prices rallied an amazing 50% or $1,000 in 1 year. Note the Fibonacci 38 retracement for this entire monster move is at 26.47. Now same chart, let's go to my buy zone. That's where my buy zone is, at this, just above this Fibonacci 38% level. I've got the buy zone at $2,700. I expect an ABC pattern down, so an A leg down, a B correction up, and then a C leg down, which may or may not break the low at A. So be alert for one of my 9 patterns that signal a trend change around the 2,700 level. Next up, let's look at copper. Copper has been a nice gainer this week and this year. It's finally breaking above the $5 level. Is copper telling us that the recession that everybody's forecasting could be a mild one, as they call it Dr. Copper? Note the wave projection in red from February's move. We did the same wave from the low in late February up to early March, but it wasn't hit until just recently this week, actually yesterday, Thursday. Since peaking last month, prices, I have a buy zone down there on a correction at the 38% level. Although the last two daily bars closed strong after sell-offs intraday, note the bottoming tails on the last 2 bars. This signifies buyers coming in. This might mean copper could have a wave extension to the 125% of the prior move. That would put a target in around 525, 530 area. Finally, let's go to corn. Corn has rallied about 40% since August of 2024. And since peaking last month, price has fallen to not only the Fibonacci 38% level, but also the 100 bar moving average, simple moving average, where it's found a lot of support. It reached that 100 bar moving average in the fib level really fast. It happened in about 2.5 weeks. But note the wide range bars up off of these levels. That tells you a lot of buyers are coming in. Corn, in my opinion, is setting up for a nice asymmetric long trade for a test of those highs and a probable breakthrough of those highs around $5 a bushel. March is a key month in corn. What happens in March can carry corn for the weeks, if not months, ahead. So a strong close in March could signal a good April and May. Thanks for watching. Please like, share, and subscribe. If you got any value from this, please let me know. If you have any suggestions, please let me know. Thanks for watching.